on such an important day. Really appreciate your time.
Thank you, Nilesh.
All right. Well, like we said, a bevy of very important market voices and joining us now is Mr. Nilesh Shah, MD of Kotak Mahindra AMC. And as I told you, Nilesh bhai, it was impossible to think of a day when the markets have hit all-time highs and you do not talk to NDTV Profit. So great to have you. How are you feeling, Nilesh bhai? I mean, this has been a labored move to all-time highs after hitting them in September. Will the next set of rallies be more swift? Is the stage set for that? Or is it uncertainty that we are surrounded by?
A lot depends upon flows. We have seen clear division where domestic institutional investors led by mutual fund have been consistent buyer over last couple of years, and promoters and FPIs have been consistent seller. Now against MSCI emerging market benchmark weight of about 18.5 to 19%, FPI ownership is roughly about 15.9%. But in that there are passive funds which are also running at replication of benchmark index. That means active FPIs will be somewhere around 14 to 14.5% and underweight of almost 1/4. Will they continue to run such large underweight? The market is expecting selling intensity to come down and eventually FPI turning buyer. If FPI buying resumes early, this rally can go higher. If FPI intensity comes down, the markets will consolidate and move forward. And if FPI buying is much later, then maybe we'll see some sideways market.
Nilesh bhai, hi, Tamanna here, and thank you so much for your time to us today. And I know you're talking about what role FPIs will now have in the continuation of this rally. Do you think the inking of the India-US trade deal will be that next trigger, which then ensures that we sustain? How important does it become in the bigger picture, considering that we've reached here without those factors?
So undoubtedly, Tamanna, a good US tariff deal which removes unjust import duty levied on India for import of Russian oil, ignoring the fact that European Union and China is much bigger buyer of Russian energy. If that does materialize, there will be relief rally in the market. Now, please remember, market discounts rumor and sells on fact. So relief rally can happen in expectation of tariff deal, or if it is not discounted, it can happen post announcement of tariff deal. But certainly tariff deal could be one trigger for market to go up. The second thing could be the Russia-Ukraine peace proposal mediated by US. If that goes through and we don't have a tariff deal, probably the 25% additional import duty levied on India unreasonably for import of Indian oil, for Russian oil, could be removed. That itself could be a trigger for the market.
Nilesh bhai, yeah, what's the concern? I mean, I hear completely conflicting views on valuations as well, with some people saying that much above the long-term averages is a negative. Some people saying that since the earnings growth cycle is starting, you probably expect that India has never been cheap. Do you believe valuations will be a hindrance, or will it be acceptable because India has always been expensive?
So again, there is no one standard way of looking at it, Neeraj bhai. Anyone who wants to buy will continue to raise bogey of excessive valuation. Anyone who is already owning stocks and invested into the market is likely to say valuations are reasonable. So there will be position talk. A buyer will seek lower valuation. A seller will say these valuations are reasonable. But removing those human biases, today, after 1.25 years of underperformance, India's premium over emerging market in terms of valuation has come down. It has come down to around historical averages. Undoubtedly, with better earnings growth, with better governance, India will trade at a premium. 1.25 years ago, we were trading at a large premium to our peer group. Now we are trading at around historical average. So I will be neither glass half full nor glass half empty. I will say beauty is in the eye of beholder. If you are long-term investor, because of earnings growth, you may think India is the cheapest emerging market. If you are a trader, you may think India is the most expensive emerging market. Take your pick.
The beautiful thing about that analogy, Nilesh Bhai, is that Indian investors right now are gazing at markets with that love. So that really is working out. Just some specific stories in it. And one of the theories is that India will turn out to be an anti-AI trade. I want to take further a conversation we had at the NDTV Profit Ignite session, where you had talked about some of the dinosaurs. Do you think that the dinosaurs are beginning to move?
Tamanna, it's a tough call. Undoubtedly, the big dinosaurs also moved when their tail was on the fire. But that move was not sufficient. In an absolute world, every company is trying to improve. There's no doubt about it. But in the relative world which we are living in, I have to outperform my competitor also. In mutual fund, I don't get money only if I outperform benchmark indices. I also have to outperform my peer group. And this is where the difference between men's and boys will be created. There are many small, mid, and large cap companies which are leveraging technology, including AI, to create better, cheaper, faster solutions. And there are many companies which are behaving like dinosaur. Tail is on fire, but they are moving slowly.
No, so do you buy the theory that India could be the hedge against the AI trade?
So again, from a positioning point of view, undoubtedly, ours is a far more domestic growth story. It's driven by reforms unleashed by the government. It's driven by slow but steady improvement in productivity as infrastructure is being built and Indian talent is becoming entrepreneur in India. But at the same time, we'll have no option but to leverage AI to compete in the world. So I will put it, India is a story not for development of foundational AI like LLMs or GPUs, but it is a story of leveraging AI to create solutions for the world and benefiting out of it. AI is the highway. We are unlikely to build that highway. But on that highway, even after paying toll charges, we will be able to run various public transport utility like buses, on which passengers will find convenient to travel and pay us more charges.
Would the guys who help maintain the highway do well, Nilesh Bhai? And therefore the question is, Indian IT, which has long withstood the pressure of newer technology beating them up, this time around the story is the same thus far. Will Indian IT come out of it triumphantly? Is it a sector that is worth looking at despite the AI threat?
So, Neeraj Bhai, I'm giving answer without great conviction because as things move forward, we'll keep on changing our opinion.
Got it.
But within IT, I believe there are companies which are leveraging AI to deliver cheaper, better, faster solutions to customer. They are focused on enterprise AI, whereby they help companies to arrange their data, use LLMs to leverage those data for outcomes, and finally secure that data and knowledge so that your competitive advantage and privacy remains. Enterprise AI could be as big business as IT services business today. Indian IT companies will be globally competitive in enterprise AI business. So again, in the IT sector, you will find nimble companies and you will find dinosaurs. Better to be with nimble companies. But as I mentioned, this is not high conviction call. We have some positions in mid-cap IT companies. We believe they are on the right path, but every quarterly results, we will be carefully watching them.
Nilesh bhai, one more question would be around whether it might help to have a domestic-centric portfolio at the current point of time versus having too many export-oriented themes, simply because all the pushes from the government, the policy push from the government on multiple things is pointing towards a revival of consumption. We've seen some numbers already. Would that be a good strategy or not quite?
So, Neeraj bhai, broadly, yes, consumption will get supported by money kept by government in the pockets of income taxpayers, 1 lakh crore a year, on the pockets of bottom end of pyramid through GST cuts of about 2 lakh crore. And government is taking away 1 lakh crore through GST from the pockets of HNIs and rich people. But that's unlikely to impact their consumption. Then there is interest rate cut of about a percentage point, and who knows, we could be lucky on 5th of December. That will put about 1 lakh crore in the pockets of EMI borrowers. Then there is gaming ban, which is keeping 10,000 crore a month or 1,20,000 crore a month in the pockets of speculators. And then finally, there is mother of all, 8th pay commission recommendation, which over a period of time between central, state, local and PSU could benefit more than 3 crore Indians. Put together, a lot of money is going into the pockets of taxpayers, consumers, speculators, borrowers and government employees. That should support consumption in the days to come. Market is reasonably aware of all the details I mentioned, and hence a lot of it is in the prices.
Before we wrap up, and I know we extended this a bit, but can't not ask you about what you felt of the Indian cricket team fortunes. They are diametrically opposite to what's happening in the markets currently, and the cricket fan in India is distraught at how the test team is performing. What did you make of it? Will the markets be completely opposite of the fortunes of the Indian test team?
So Neeraj bhai, I will try to give this answer as a fund manager and not as a sports enthusiast. You have shared the feeling of every cricket fan at the miserable performance of Indian cricket team. But this is what happens when you build a portfolio for one particular cycle, and what you get is exactly opposite. We are trying to win a test match with T20 teams player. We are selecting people based on their IPL performance and T20 performance rather than Ranji performance. There are batsmen who are scoring tons of runs in Ranji matches, standing throughout the day on pitches, but we want to pick up cricketers who have done well in 20 overs. No doubt the results are disastrous. The same thing happens in equity market. You want to play for long term and take momentum stocks and then don't monitor them. The results are going to be exactly like India trying to win test match with T20 players.
Nilesh bhai, trust you to come up with the best analogy. So then I have to ask, who are the players in your dream test match team to beat for Indian equities? Or what kinds of players?
My fact sheet is visible to everyone. We disclose it every 15 days. As of today, as I mentioned, we are bullish banking and financial services, both private as well as public. We are also bullish on a longer term basis, consumer theme. So from here over medium term. Now, in that, it is more consumer discretionary rather than consumer staple. We also believe in this budget, the focus on government capex will continue, and construction companies are available at a reasonably low valuation compared to historical averages. They should also do well.
Thank you so much for speaking with us, Nilesh Shah there, breaking down, how he sees this historic day for Indian markets. But we continue the coverage and the